Let's talk about one of the greatest turnaround stories of our era. Let's talk about Ford Motor. I like this one so much that we own it for the charitable trust, where it's been one of our best performers. We initially started our position at $9 a little over a year ago. Now it's at $19 and change. And if you want to know what's driving that move, it's because the relatively new CEO, Jim Farley, has orchestrated an incredible comeback. Yep, last year, Ford finally brought in a real car guy to run the company. His first order of business was to run the company like a for-profit enterprise. See, in the old days, Ford was more committed to building cars everywhere in the world, kind of a statement, even when they couldn't make money. Yeah, in a lot of places. Under Farley, though, the company's committed to making money in every market they participate in, or else they'll leave it, and every car and truck they build, or else they won't build them. Every one. More recently, he's made a massive push into electric vehicles. Earlier this year, Ford rolled out the all-electric Mustang Mach-E, sold out immediately. And by the way, they make money on every one of them. And they've got a huge lineup coming next year, including the electric F-150 Lightning pickup truck and an electric commercial van. Behind the scenes, management's also been working to arrange long-term supply agreements for the semiconductors and the batteries that the whole industry desperately needs. It's going to be a dogfight there. They've made savvy investments, too, taking a stake in Argo AI, autonomous driving technology company, not to mention their position in Rivian. What a windfall, the newly public electric vehicle maker, which is now worth $12 billion, their stake alone. Now, earlier today, we got a chance to speak with Jim Farley as part of the CNBC Investing Club's regular conference call. Now, if you want to see the Investing Club's whole thing, of course, you got to join the club, and I'm urging you to do so. Here's what you have to do. You can go to cnbc.com/investingclub/live. Wow. Okay. There it is. But this was such a great interview that I thought I should share some of the highlights with you. Now, what makes me so confident that Ford Motor is doing well, even in the face of the semi shortage that's kept the lid on production? Well, some of it's because the company's latest quarter was strong. By the way, added a dividend. More importantly, though, in late October, what they're doing is kind of reorganizing and making it clear that they can do even more dividends than just the one they've done. Why? Well, why don't you listen to Farley's reasoning?
Our business is getting a lot of momentum now. The company's getting healthier. So we thought it was the right thing to reinstate the dividend. We want to go higher. And our cash position is great. You know, we have incredible demand for our product. We have the green bond that came out. We've lowered interest rates. We took on a little more debt during COVID, and we're now paying that very expensive debt back. So our balance sheet looks good, and we're going to go as deep as we can to reward our shareholders.
In the old days, Ford used to have a gigantic dividend. Then they had to get rid of it. Maybe they can bring a lot of it back. But how about this huge push into electric vehicles? That's the kind of thing I really care about. Why don't you listen to this?
We're completely oversubscribed with our battery electric vehicles. Lightning especially, the F-150 Lightning, America's best-selling vehicle. Everyone loves the electric version. They haven't even driven it yet. Where do they drive it? 0 to 60 in like a 911. It's just an incredible product. It powers your house for 4 days. We had to stop reservations. We got so many.
Powers your house for 4 days? I'll take that. Remember, the F-150 is indeed the best-selling vehicle in the country for the past 4 decades. That's right, 40 years. And I think this electric version, more than anything else, is what will allow Ford to mount a serious challenge to the only major player in the space, Tesla, and to actually make a lot more electric cars than GM, although GM's doing a lot of right things, too. But can Ford really compete with the all-powerful trillion-dollar Tesla?
We have to scale our electric business so that we are competitive with them on scale or beat them in more profitable segments like pickup trucks and commercial vans. And we have to make money on those vehicles. The scaling is the first part. We have a roadmap. We now have the talent in the company, like Doug Fields, who came from Apple and Tesla. So we can do this, but it has to be both.
Yeah, Doug Field being the guy who was running the Apple electric car business. That was a real nice pickup by Jim Farley. All right, make no mistake, Ford is aiming to win. Or as Farley, who races cars in his spare time, says,
second place is the first loser. That's how I look at business. Ford employees deserve the best leadership, and our investors are betting on this company. So, yeah, you should expect us. As we go battery electric, we can really reinvent the brand. And we're doing that with F-150 Lightning. We're already seeing it. Now we have to develop a lot more vehicles just just that good and build them and do it profitably.
Second place is the first loser. I'm going to use that for everything I ever do in the sports world from now on. Okay, right now, we've got a supply chain crisis in this country, and the auto industry has been one of the hardest hit areas. So you have to ask yourself, can Ford really come up with the materials they need to launch their massive new electric vehicle lineup next year? And that's the big complication. Sure seems like the answer is yes. Listen.
We can put more shifts of workers on. Our UAW members are ready to make these vehicles. We had to find batteries. That's in the middle of what we're doing. As big companies, we're not used to committing to stuff that we don't have all the answers to. But, you know, we think we can do it. In 24 months, we're going to double our capacity for these battery electric vehicles. We're well on the way of doing that. We've gotten a lot of incremental battery commitments out of our Georgia facility, and we really think we can do it. And my name's on the line.
If they can really double their capacity for electric vehicle batteries in 2 years, that's huge for Ford and huge for you if you're a shareholder, and huge for my charitable trust. And Farley's adamant that they can do it.
Don't bet against Ford when we have to increase capacity. This is what we do.
What about Rivian, the electric vehicle company that recently came public with a bang? You know, the one Ford's got that 12% stake in. Ford originally had joint plans to develop electric vehicles with these guys, but that plan's been scrapped. Farley, uniquely, though, doesn't sound threatened at all. Listen.
We're really excited, actually, about Rivian. It's a great American company. You could argue about what it's worth versus what Ford's worth, but I really like the talent over there, and I like their positioning of products. They're going after pickup trucks and van owners, and we like those kind of people. They're hardworking Americans who want to make this transition to electric.
Well, Rivian's come down big from its highs. It's still nearly a $100 billion company. Just remember, again, Ford still owns 12% of that. Though I wouldn't be surprised at all if they eventually sell their stake down to zero, frankly, because it's too dicey owning shares in a competitor because they need the money. But the bottom line, I feel confident about Ford because the newest CEO, Jim Farley, has already done a magnificent job of turning the business around and really aiming for profitability, not just world domination. The guy's a real straight shooter, and having spoken to him earlier today, and I urge you to join the club and watch this whole interview, he sure sounds very confident about the future. More importantly, betting against him has proven to be a serious and a costly mistake. Remember to head to cnbc.com/investingclub/live to see the whole CNBC Investing Club event today. It was just amazing. And we got some incredible members from you, and I love it. Questions for you. I have to tell you, the questions from the members, the best part of the show. So many that we were not able to get to all of them. So let's take one of those calls now.
When I received the updates on purchases, I noticed that you mentioned the percentage of the portfolio the asset represents. How do you determine the allocation percentage of each asset in your portfolio? Thank you.
Thanks, Jim.
Thank you. Great question. I like to do, I tell you, this is something in Bob Michelle from my home state of Pennsylvania, by the way. What I like to do is not have any one stock be able to control the direction of the fund. So let's say today, we had a stock that was up, say, 25%, and our whole fund therefore swung, say, 15. We're too correlated and too big. Hardest way to be able to cut back, though, is to have to sell a great stock. We don't want to have more than, say, 6% in an individual stock. It's a discipline. Discipline always trumps conviction, so we do a little selling when that happens. Listen up. I'm bullish on Jim Farley, and I'm bullish on the Ford Motor Company. It is one of the greatest turnaround stories of our era, and it's just not heralded enough. Now let's work for Mad Money, including my exclusive with MP Materials, after announcing plans to build a magnet factory in the U.S. I'm hearing more about the rare earth materials company with the CEO. And by the way, just so you know, that's what you need to make the batteries that Farley covets so much. Then we're in the midst of an enormous housing shortage, and I'm helping you set up your playbook on investing in the space. And of course, all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call. at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.